Simon Kidston, Non-Executive Director from Genex Power, ASX GNX.
Good afternoon, everyone. Simon Kidston, great to be here today. A slight change of pace. I want to tell you all about renewable energy storage in the Australian market. So Genex Power has got $1 billion of capital invested in the Australian market, producing strong cash flows for the business and our shareholders. I'll tell you about how we make money in a moment, but what I want to say is this business not only does it make good money, but it has a very solid environmental contribution. The benefit from our environmental generators, this green portfolio, is equivalent to abating 2 million tonnes of CO2 from the environment. So any investor in our business will make money by virtue of its exposure to this renewable energy, but also know that they're doing the right thing for the planet. In terms of scale and business, we're technology agnostic. So we have a portfolio of solar farms, wind farms, Tesla batteries, and pump storage hydro. In total, that's $1 billion of capital spread between Queensland and New South Wales. It's all about the cash flow. Cash flow will drive shareholder value. This chart is quite detailed, but what I'll explain is that we've given revenue guidance from today all the way to 2055. And what that shows you is that we've got a steadily increasing revenue stream, which is all underpinned by long-term contracts. So that revenue stream averages $90 million per annum from today all the way to 2055. So it's it's locked in growth by virtue of long-term contracts with Tier 1 customers. So just mentioning who those customers are, it's the Queensland Government for our solar farms in Queensland. It's Energy Australia, one of the biggest energy companies in the country, for our pump hydro project, and it's Tesla, the biggest company in the world, or one of the biggest companies in the world, for our battery project in Queensland. So it's a very, very strong baked-in revenue stream. This year we'll generate revenues in excess of $20 million. By the time our battery project is operating mid-next year, the run rate will exceed 35, and you can see the growth from there. This is possibly the most important slide in our presentation, and what it shows you is the structural changes in the energy markets between now and the 2050s. We all know the energy market is decarbonising. We all have heard that the big major coal-fired power stations are closing down over time. It's not going to happen today, but it's locked in to happen over the next 10 or 20 years. That capacity is being replaced by wind farms and solar farms. Renewable energy, it's clean and green, but of course we all know that the renewable energy doesn't always work if the sun's not shining or the wind's not blowing. And this is the important piece. Our business is focused on energy storage. So essentially, through our pump hydro projects, through our battery projects, we can store energy when it's in surplus and dispatch it into the grid when it's required. So what you see here, over the next 30 years, the black line shows you the terminal decline of coal-fired power stations, and the blue and the green is the replacement by wind and solar. That is happening. It's a structural change, and it provides a massive tailwind to our energy storage business such as Genex Power. This is our first battery project. We financed it last week. It's a $59 million project, and Tesla is providing the batteries and they're providing the revenue guarantee. It's our first battery project. We've got an offtake arrangement and construction has just started. It's a fully funded project. It's located near Rockhampton in Queensland, about halfway up the Queensland coast. And we're building this battery park right next to one of the biggest substations in the country. Just some financials on this project. Capital cost just below $60 million. Revenues should be in the order of $15 million per annum. Had it been operating last year, we would have made $20 million. So I'm pretty confident giving you that revenue guidance of between $11 and $15 million right there. We've got a guarantee of performance from Tesla for the next 20 years. Probably will last longer than that, but at least we've got a guarantee from a major corporate for the first 20 years. The EBITDA margins for these sort of projects are phenomenal, 75%. Very, very solid cash generation from all of our projects. So equity IRRs are a very, very healthy 9 to 17%, depending on where the revenues land. Just a few words on our flagship pump hydro project. This is a $770 million project located in North Queensland. It's currently under construction. There's some photographs here showing you the status of the construction. It's a massive, giant water battery. All the construction risk is taken by the builder, John Holland and McConnell Dow. We're in the process of doing underground tunnelling. We'll install some massive hydro turbines. And when this plant is operational in 2024, Energy Australia will lease this from us for the next 30 years. So Genex Power, as owner of this big infrastructure asset, will collect a rental stream for the next 30 years. Fantastic project for us, and I'm really, really proud of our team that we've assembled and got this project into the construction phase. Just a few words on our operating portfolio. We're currently generating revenues in the order of $20 million per annum. That's from 2 large solar farms, one in Queensland, one in New South Wales. For the first half, we generated revenues just over $10 million. We'll replicate that again in the current half to produce that $20 million of revenue. And that's under very, very solid EBITDA margins. Of course, the sun is free, so the fuel cost is therefore free. Therefore, this thing just generates, basically as long as the sun's shining, we generate cash from these 2 assets. We've got a wind farm in North Queensland, which is currently under development. We're developing this 50-50 with one of the biggest energy companies globally, a group called J-Power. They happen to be a shareholder of our business. We expect this project to be in construction by the back end of next year. A big project, really exciting, and the market's crying out for quality wind in Queensland. I did mention at the start our focus on the community, the environment. Of course, our primary focus is for shareholders, but we'd like to do so in a way that's good for the environment and the community. We've got very high standards in terms of Indigenous engagement, employing a good proportion of women in senior roles, and it's something we're very proud about. Of course, the environmental contribution from generating clean, green energy is obvious in terms of CO2 abatement and decarbonising the economy. So look, I guess as I look to wrap up, there's a couple of messages I want to leave you. It's $1 billion of capital. We are not a startup. We've got a very, very solid business. And those projects which are now in operation are backed by long-term contracts. Those long-term contracts deliver substantial revenues. And by the time this portfolio has matured, by 2025, I'd expect from that point we would be in a position to pay a significant portion of our cash flow to dividends to our shareholders. So 2 operating solar farms, 1 battery in construction, the pump hydro, again fully funded in construction, and the wind project, which is looking very attractive and will be operational by 2025. So to summarise, operating cash flow, tier 1 counterparties, a very, very strong revenue stream that's growing over time, and a very exciting development pipeline. Board and management have significant skin in the game. I'm Simon Kidston, I'm one of the co-founders. I'm a significant shareholder. We've just raised money, so we've got in excess of $60 million of cash on the balance sheet. So we don't expect to be coming back to the market. We just want to commercialise the portfolio in front of us and deliver for our shareholders. So thank you very much for your attention.